Hey everyone! Before we dive in, just the usual friendly reminder, this is all for educational purposes. It is definitely not financial advice.
All right, let's get into today's health report because the headline number is a big one. The fund has rocketed up to almost $1.93 million. But, there's a lot more to this story. We're going to break down what's real organic growth from this market rally and what's a one-time structural change that you need to know about.
And there it is, just shy of $1.93 million. Now, when you remember that the fund was down at $1.37 million just 48 hours ago, yeah, on paper, that is a massive, massive recovery.
To put a percentage on it, that's a 41.1% jump in just 2 days. I mean, that's a staggering number no matter how you slice it. And a number like that, well, it brings a lot of excitement for sure, but it should also make you ask some questions.
And that is the million-dollar question, isn't it? So before anyone gets carried away, let's get really transparent about where this growth is actually coming from. So let's just rip the Band-Aid off and deconstruct this headline number. I want to give you a totally honest breakdown of what made this big surge happen.
Okay, so this chart right here, this tells the whole story. That huge $500,000+ jump is really made of 3 separate things. First, the biggest piece by far, is that first bar. It's a one-time thing where we consolidated the TVL, the total value locked, from our white label products right into the main fund. So think of it like moving cash from your checking to your savings account. It's not new money, it's just in a new place. Next up, we have the genuine organic recovery from the market bounce, which you can see is a really nice chunk, but it's smaller. And finally, that little third bar, that's fresh capital, new money from over 1,400 new bonds being minted. So the key takeaway is simple. The big headline number is a mix of a one-time accounting move and some real solid growth.
Okay, so let's zoom in on that middle piece for a second, the organic recovery. To really get what's going on, you have to look at the wider market, because, as we know, no project operates in a vacuum. The whole crypto market is basically breathing a sigh of relief. You can see Bitcoin and Ethereum both had a really strong bounce. But, and this is a huge but, look at that fear and greed index. We are still deep, deep in extreme fear. So while this bounce feels really good, this is not a confirmed trend reversal. We got to stay cautious here, folks.
All right, now we get to what I think is the most important part of this entire update. Seriously, forget the fund value for a minute. Let's talk about the engine that actually powers this entire protocol.
Exactly. The fund's total value, that's just a snapshot in time. It goes up and down with the market. But the yield, man, that's the cash flow. That is the actual heartbeat of this thing.
And this is it, almost $10,000. And to be clear, that's not the fund's paper value. That's real spendable USDC profit, generated by the system, flowing directly to bondholders in just 1 day. This number right here is the true measure of the protocol's health.
And check this out. On February 6th, right at the absolute bottom of that nasty market crash, the engine was kicking out about $8,000 a day. Today, it's almost 10 grand. That's a 22.5% increase during the crash. So how's that even possible? Well, chaos and volatility, they create trading volume. And that volume is pure fuel for our yield engine. The engine didn't just survive the crash, it literally hit the accelerator right through it.
And here is your proof of conviction. While the rest of the market was panicking, 1,436 new bonds were created. People saw that fear as an opportunity. They jumped in to get a piece of that accelerating yield engine at a serious discount. I mean, what a powerful signal that is.
Now, some of you who are watching the dashboard like a hawk might have noticed the wallet balance is a little high. So let's just talk about that right now, because it's actually a pretty bullish sign.
So right now, about 11% of the fund, that's over $217,000, is just sitting in the wallet, undeployed. And yeah, that's higher than usual, but there's a super simple reason for it. It's all that new capital from the consolidation and from those 1,400 new bonds we just mentioned. It hasn't been put to work yet. So you can think of it as almost 89 ETH of dry powder, just waiting to be deployed into new positions that are going to start generating even more fees.
So this creates a temporary thing we call APR drag. It's pretty simple. Imagine you're calculating the average height of a basketball team, but one of your tallest players is still on the bench. His height isn't contributing yet, right? So the team's average height looks a little shorter than it really is. That's what's happening here. That 11% of capital isn't earning yield yet, so it's temporarily dragging down the overall APR. The second we deploy it, that drag vanishes, and the APR for everyone will tick right back up. It's a totally normal, healthy sign of growth.
So where is all this amazing yield actually coming from? The answer is simple, and it's been super consistent. Trading volume. Volume is the fuel for this whole engine.
We're seeing over $14 million in daily volume, and this is on a weekend, by the way. But look at where it's coming from. The BNKR token is just an absolute powerhouse, driving almost 9 million of that all by itself. That is 63% of the total volume. This one asset is the main fee generator for the entire protocol, and its performance has just been incredible.
Okay, so let's wrap all this up, put all the pieces together, and give a final verdict on the fund's health as we close out this explainer.
So the official verdict is recovering. We've got green lights on all the core fundamentals. Yield is accelerating, the number of bonds is growing, and volume is really strong. We've got yellow caution flags for the wallet balance being a bit high, which is temporary, and of course the broader market sentiment, which is still in extreme fear. But overall, the system is showing some incredible strength and resilience.
And I just want to end on this because this is the real takeaway. Nearly $10,000 a day. Real trading fees. Real yield. Through the worst crypto crash we've seen since FTX, the engine didn't just survive, it accelerated. That is not a headline, that is proof of concept.
And finally, let's just end with our full risk disclosure. Please remember that all crypto investments carry significant risk. And like we talked about, the fund value includes that consolidated TVL, and past performance is never, ever a guarantee of future results. Always do your own research. Thanks so much for tuning in today.